have found that brokers are reluctant to diversify into other areas, and I think there's a number of reasons for that. One is that the third-party channel or the broker channel in the residential market, frankly, it's exploded over the last 10 years or more, and brokers are comfortable. So it's doing what they know, doing it well, being well remunerated and paid for it. But I think it's fair to say that with a large majority of brokers firmly on their radar is, should I be diversifying my business into other areas? And some are exploring it and some aren't, and some are putting it into the too hard basket. But I have no doubt that that's a channel that everyone should be turning their mind to and thinking about, how am I going to tap into it? Because if you look back in history and ask yourself the question, why has the residential market been so successful as a third-party channel for brokers? It's because there was a niche in the market. Well, that same niche exists today in the commercial market, and it's a natural progression of where they are now. And the niche exists because banks, in particular, haven't been as effective as they would like to be in satisfying their customers' needs. It's very, very broad. If you look beyond residential, it's everything from equipment finance, motor vehicle finance, invoice financing, commercial loans, factoring, debtor finance. There's a whole range of SME needs, business needs. And when you consider that a typical residential mortgage broker has a portion, and in some cases high as 30 or 40% of their existing database are SMEs, it's important that they're exploring the SME's needs well beyond just the residential mortgage loan. Otherwise, they're going to run the risk of competitors coming in and taking that business, and potentially there'll be leakage from a mortgage business as well. You say that SMEs have worked closely with their accountants. You need to explore that, and I agree with you. SMEs always have a relationship with their accountant, but what is the relationship? What does it look like? And really, it's one of putting financial statements together. So it's compiling them, and it's financial statements that are ultimately going to satisfy the tax man so we can lodge our tax returns, or they're going to satisfy the bank because we need to submit financials to support our lending requirements. But does the relationship extend beyond that? And I would probably challenge the thinking a bit on that, because I'm not sure it does. I think that there is a hunger of within the SME for a trusted advisor that they can sit with, that they can talk to, they can collaborate with, and they can explore how to do things better in their business. With an accountant, and I accept that I'm generalising, in a lot of cases it's looking in the rear vision mirror. It's what were my financials, what was my profit last year, what is my tax position, and it doesn't extend too much beyond that. And certainly, in my experience, there's a huge opportunity there to take those financial statements and to be looking into the future. Brokers are in a very unique position because they can work collaboratively with their client, they can work through the financial statements, they can sit with them and they can forward plan, and they can look at where they can service their needs. And then they have the great advantage of being able to look across the market in terms of what is available from a product and service perspective to come up with the best solution. A broker, as a trusted advisor doing their job effectively, can save an SME a lot of money by identifying opportunity. They can also help them to be more successful in their own business by working through what they're seeing in the financials and the changes that could be made or ought to be made from a recommendation point of view to manage the business more smartly. Great question, and my advice to brokers always is the first place to look is within your own database. If you have clients at a residential mortgage level that you are servicing now that are SMEs, you have opportunity. And the way to deal with that is obviously to expand your relationship and offer more than you currently are, but to identify clues as to where you might be able to satisfy their broader banking or finance needs, I should say. And a great starting point for that is their financial statements. If you're receiving their financial statements in support of loan applications without too much effort and with a little bit of skill and guidance and direction, you can find clues. You can look into those statements, you can look at some of the ratios, and you can identify things that I would think would make great sense to put on an agenda for your next review meeting with the client as a series of bullet points that will lead you down the path of cash flow solutions, equipment finance, motor vehicle finance, or whatever the case might be. The trick is, the key to all of this is, you got to know where to look, and you look into your financial statements. So the starting point's your own database. You've got them there. Outside of that, build your networks, build your referral sources through, build an alliance. If you are uncomfortable about branching into other revenue sources at the moment through commercial finance or anything else, go and find a broker that specialises in that and set up a mutual relationship where you do the residential mortgages, they do the commercial finance, and you share in the revenue. You can do that in a white label way, or you can do it any way you want, but find an alliance. There's a variety of ways that you can get yourself into this very lucrative niche market that is front and centre right now, but you really got to sit down and plan it.